Have you ever invested in a coin because everyone around you is saying it was going to skyrocket? You open Twitter and every other person is writing that it's the new Solana, X100 in the coming weeks, last chance to get in. You feel like you're missing out, and you buy. And then you sit and watch as the price goes down. Panic, loss, and only then you think, why did I do that? We've all been there. Today, I'm going to show you 5 fatal mistakes that make people lose money in crypto. Most importantly, we'll figure out how to really protect your capital when the market starts testing your strength again. Let's start with the most insidious one. It seems harmless, but it's where almost all losses begin. You see everyone discussing the same coin. You go on Twitter and you just can't keep a cool head. One post after another. I told you at $3. Now it's $12. It's just getting started. Last chance to get in before the takeoff. $5 now. $50 in 2026. Screenshot this. And you can already feel the anxiety rising inside you. Everyone else is in position, but you're not. Your hand reaches for the buy button, just in case. What if it really is a rocket? This is FOMO, the fear of missing out on profits. And it destroys more portfolios than any bear market. But let's be honest. In crypto, FOMO is no accident. It's technology. New projects plan information waves in advance, hire influencers, buy advertising, and launch fake accounts. The goal is to make you feel like everyone else has already bought in, and that means you have to buy it too, right now. You think you're making a decision, but in reality, you're just buying an exit for those who got in earlier. You're the last in the chain, and when you get in, they're already getting out. Do you want to protect yourself from this? Then before you buy, ask yourself one simple question. Who is promoting this project? If you see anonymous accounts with no history, which wrote about one coin yesterday and another today, this is not analysis. It is simply advertising. And most often it is paid for by a project that wants one thing, for someone to buy from them at an inflated price. Next, see if the project has any specifics. A working website, tokenomics, a clear team, a roadmap. If instead you only see slogans like X100, it's just the beginning, and memes with the moon, you're not looking at an investment. It's a funnel that's been set up for you to walk into without asking questions. If the project has already launched rounds or attracted investments from funds, it is also important to understand this, because someone has already received tokens before you. And all this hype on the network may well have been launched precisely so that those people could exit, and you became their liquidity. And finally, ask yourself one uncomfortable but honest question. Do you even have a reason to buy this coin? If your decision is based only on emotion, hype, and fear of missing out, then you are no longer in control of the situation. You are simply repeating the behavior of the crowd. This is exactly how money is lost in crypto, not because of projects, but because of decisions. If you learn to see such traps in advance, you are already one step ahead. Because real opportunities never require urgency, and they never cry out for attention. The first mistake often leads to the second. Let's say you resisted and didn't buy the coin because someone shouted, "Screenshot this." You closed Twitter and saw a new challenge. The price is already skyrocketing. It seems that in a moment, the opportunity will be gone forever. This is where the second fatal mistake is born. I saw the growth and jumped in. Remember how the Trump token skyrocketed? In just 3 days, the price jumped from $10 to almost $70. Many people jumped in when the growth had already been achieved. The real hype happened in the $50, $70 range. People bought confident that this growth would never end and that this was their only chance to hit the jackpot. But after just a couple of weeks, most holders found themselves in deep losses. The movement ran out of steam just when the crowd finally decided to jump in. To avoid becoming such fuel, I have a few key rules. I advise you to write them down right now. The first is called the overheating marker. If a coin has gained more than 100% in a day and has already tripled or quadrupled in a week, I move it to a separate FOMO watch list and forbid myself from making any purchases until the end of the review. The second rule is the 24-hour pause. I set a timer for a day. This is enough for emotions to calm down and at the same time to check the fundamentals, the team, tokenomics, major holders, and unlock dates. The third rule is 30% pullback plus volume. After the pause, if the project still looks interesting and the fundamentals inspire confidence, I start monitoring the chart. If there is no correction of at least a third from the peak, I don't buy it. This means that early holders are likely to continue distributing tokens, and the market has not yet shown where the real demand is without the hype. In such a situation, I simply extend the pause and observe. If there is a 30% pullback, or the price returns to the zone where consolidation previously took place, I move on to analyzing the volume. As long as the volume decreases along with the price, the fixation continues, and I wait. But if the volume shrinks and the price stabilizes at the pullback level, it means that the big players have already left, the market has exhaled, and now you can calmly plan your entry point with a stop and a fixation scenario. These 3 steps turn any vertical pump from a last chance into a clear protocol. The pause dampens emotions, fundamentals weed out hype, and the chart and volume show when real opportunities arise rather than illusions. And here's the most frustrating part. Even if you didn't succumb to FOMO and didn't rush to the top, that doesn't mean you came out a winner, because the next mistake is much more painful. I'm talking about profit taking. Imagine you got in early. Everything is going according to the plan. The project is taking off, the coin is giving X3, X5, and you can already feel your life changing. But you don't get out, because now it seems like it will be X10, X20, because that's how it always happens, right? And then a sharp reversal. Minus 30, minus 50, minus 70%. And you're no longer locking in profits, not because you're waiting for growth, but because you can't admit that you missed the moment. This is one of the most painful mistakes, because we focus on the entry point, but we don't plan the exit scenario. All attention is on when to enter, and what to do if everything goes perfectly. No one thinks about that. With such reversals, there is only one thought in your head. It's just a correction now. I need to wait. It will grow a little more, and then I'll sell. At X5, you feel like a genius. A week later, you feel like a hostage to your own greed. I explained how to avoid this in a separate video. How to understand when it's time to take profits. If you've ever been in a similar situation, be sure to watch it. It's not theory, but a step-by-step system for exiting that can be applied to any position. And believe me, this system could one day save your entire deposit. But even if you've learned not to jump in when an asset is at its peak and you know when to lock in profits, that doesn't mean you're safe. Because the next mistake that seems logical until it becomes fatal. You've found a cool project. It's growing. Everyone is talking about it. The team is strong. The ideas sound convincing. And you decide, why spread yourself thin when you can just go big on something that's really going to take off? You put all your eggs in one basket. And when the project stumbles, it's not just the project that collapses, but your entire portfolio. That's what happened with Luna. That's what happened with FTX, with Titan, with dozens of altcoins that seem like innovations. People invested all their money and lost everything. I still remember one comment on Reddit. Put in 58K over a year ago. Last week it was valued at around 450,000. This week it is worth 0. Lost it all. The problem is not faith, and it's not even the project. The problem is that you bet on one scenario in a world where there are thousands of them. Professionals don't do that. Naval Ravikant, one of the early investors in Coinbase, Uber, and Twitter, said, I make a lot of small bets because I know most of them won't work, but one will change everything. That's exactly how I approach my portfolio now. Not just buy 10 coins, but build a structure with different levels of risk and goals. The foundation is BTC and ETH. I allocate 35% of my investment funds to them. Another 35% goes to things that give me a stable income. Staking, liquidity pools, farming. 20% is promising altcoins, which I follow based on trends and fundamentals. And only 10% is new projects. The risks there are huge, but I accept in advance that I may lose them. This is not just diversification. It is protection from your own illusions. Because even if you believe in the wrong coin, the system will save you from disaster. Never bet on a coin. Bet on a strategy. Then you will not depend on luck. You will create it yourself. And here's the most painful and frustrating mistake. Because even if you did everything right, you can still lose everything. If you're not protected, cryptocurrency scammers are becoming more and more sophisticated. They mask themselves as technical support, send fake tokens, hack wallets, and send contracts that look legitimate. And one click is enough for you to give access to all your assets. Here's a scam I saw just the other day. A person receives an NFT from a popular project, opens the link to claim the drop, and loses everything in his wallet. He didn't go anywhere. He didn't sign anything. He just clicked. That's it. To avoid this, I recommend remembering a few rules. Do not click on any links in Telegram, Discord, or emails, ever, even if it appears to be from a moderator or an official website. Check addresses. Any transaction, especially with a new site, should be made only after manually verifying the domain, contract, and recommendations from reliable sources. Separate storage and activity. One wallet should be cold for storage only. The second should be for interacting with DeFi and projects, with a minimum amount. If you want to understand more deeply which scam schemes are most common right now and how not to fall victim to them, there is another video on the channel entirely dedicated to this topic. Be sure to watch it. It's not just about security, it's about survival in crypto. After all these mistakes, it becomes clear that the main thing is not only to earn, but also to keep your money. And if you want to truly protect your capital, you don't need a 100% entry point. You need a system that works even when you're not sitting in front of your screen. Personally, I use staking for this, especially in Solana. When the market is stagnant and tokens are just sitting in your wallet, why not make them generate income? But it's important not to just press the stake button and forget about it. It's important to understand where exactly your coins are, who you delegated them to, and how much income they actually bring. Because even passive instruments have nuances, and it is these nuances that distinguish a profitable investor from someone who is just hoping. To keep all this under control, I made a simple Telegram bot. It shows where your SOL is, who your validator is, how much you've already earned. And most importantly, it helps you understand how to improve your results. The link will be in the description. And by the way, if you want to learn how to predict whether a coin will grow in value, be sure to watch the next video. I'll show you how to read tokenomics, what it says about growth, and what it says about decline, specific metrics, examples, and analysis of real cases. Because crypto is not roulette if you know how to read the numbers. Remember, many can make money, but only a few can keep it. If you want to be among them, support the video, subscribe, and see you in the next video.